Well, hello, everyone. Good evening. This is Josh Greason here from Forex Bootcamp. And for those of you that don't know, we're doing a day-by-day journey for 30 days, just brief videos each day to show you a little bit about what my Forex trading life has been like. Some of you have seen me, doing Forex trading for a while. And, you may know or not know that I also have a regular, 40-hour job. I have a wife and kids and a life and things like that. And so you've wondered, how much time does this take? How much money do you make? What do you actually do to make money? All that kind of thing. So I thought I'd just do these brief bite-sized piece videos each day for 30 days. And of course, we started off really basic, like what is the Forex in the first place? We covered that. Covered, why did I start Forex trading and what is my long-term financial goal with doing this? Today is day 4 of 30. So if you missed the first 3, feel free to catch up with those videos. Otherwise, just jump right in. Today's day 4, and we're talking about getting familiar with a Forex chart. Because, not that you probably care at this stage of the game, but later in the month, I'll be showing you what I actually do, how I place the trade and things like that. And I thought it'd be helpful if you don't know, if you're not familiar with a Forex chart or what any of this means, that I should just cover like the very basics, and so you kind of know what you're looking at here. All right, so that's the background here. All right, real quick, we are looking at a chart right now, and there's lots of different currency pairs that you can trade, but this one we're looking at here is the New Zealand dollar, that's NZD, versus the US dollar, USD. It says right there in the corner which chart this is. So what this is, this measures the difference in perceived value of the New Zealand dollar as compared to the perceived value of the US dollar. So you say, is the US dollar, is the New Zealand dollar getting strong in comparison to the US dollar or getting weak? So when you see the New Zealand going down, that means the US dollar is looking better than the New Zealand dollar right now. When it's going up, then the New Zealand dollar is looking better. It's going down, the US dollar is looking better. And so on, up, down, up, down. It does a lot of up, down, up, down. I think of it as a teeter-totter. It goes teeters and it totters, and it teeters and it totters, and it teeters and it totters. And, it does that on large scale, small scale, every scale, it does that. And we can talk about more of that when we get to indicators and why price moves. Price moves up or down. The perceived value of the New Zealand dollar goes down, maybe because some bad economic news came out here. Let's say, they announced unemployment, and unemployment is up now compared to last month. So more people are unemployed. That doesn't look well for the New Zealand economy, so the perceived value of the New Zealand dollar goes down. And then maybe, something good happens here, and hey, interest rates went down, which means more people can, buy houses and stuff. So that's good news. So now the perceived value of the New Zealand dollar goes up, and so on. So news events, financial events, trade events, natural things, disasters, wars, all kinds of things impact price, on a day-to-day basis. Excuse me. So what we're looking at on a chart here, basically from left to right, is time passing by. And what we're looking at top to bottom to top, is the difference in value between those two currencies. So price moves up and down, price difference moves up and down, and time goes left to right. So how much time are we looking at here? Let me zoom in a little bit. So these candles are really far away. Candles. Let's start with candles. You can view these charts in different ways. I prefer what's called Japanese candlesticks. Each one of these sticks is called a Japanese candlestick, or just a candlestick. And you have a body, which is the thick part of the candle, and then these little lines are called wicks. A candle and a wick. A candle and a wick. A candle and a wick. Okay? So what does a candle mean? A candle represents a period of time. So what period of time does it represent? That depends on which one of these buttons you push at the top. Right now we're on the H1 chart, which is a 1-hour chart, which means each candlestick represents 1 hour in this case. So I can go to, this is several hours. This is where we are right now. And I just got tapped out of a trade I was in, but it's okay. I still gained $1 or $2. No big deal. In any case, here's where we are now in time, 5th of June. When we're on a 1-hour chart, we can only see back as far as 29th of May. It's like a week, because each candle is worth an hour. Now we bump up to 4 hours, or a day. Every single candle is worth a day, represents a day. The weekly chart, each candle represents a week. The monthly chart, each candle represents a month. One line there is a whole month. So you can see, I'll scroll a little bit. And 1 December was here. So 1 January, February, March, April, May, June. Here we are on June 1st. This chart now goes all the way back to December 2007. And I could just scroll back in time and, show you quite a ways back to 97. So 20 years worth of chart there of the history of the New Zealand dollar versus the US dollar. So it measures time left to right. It measures price difference left to top to bottom, bottom to top. So we needed a unit of measure. Obviously, we can measure this down here in hours, weeks, months, etc. We needed a unit of measure to measure price difference. So we didn't want to use the US dollar or something like that, because let's say you use this chart everywhere in the world. This is just a standard trading application software. It's free from your broker. It's used around the world by traders everywhere. So if you're a trader in Japan, you don't want to say, well, how much did this move here? It moved X amount of dollars. You don't care about dollars. You're in Japan and you're familiar with yen. So we didn't want to measure it in dollars or yen or euros. So they chose a standard unit of measurement called a pip, P-I-P, pip. So how many pips did price move up? Or how many pips did it move down? How many pips did it move up? How many pips did it move down? And so on. So how much does a pip worth? A pip does have a dollar or yen value, has a currency value associated with it, but it varies dependent upon what you put into your trade. So you have something called a lot size in there. You choose that number, and that determines what the dollar value in our case of a pip would be. So you want to measure how many pips this moved. It went from 48.77. If you look way down here, it tells us the number 48.77. I'm just going to round it to 48.80, let's say, okay? And we want to say, how far did price go? To 40, sorry, where was I? 48. Oh, I'm on a big scale right now. Let's go to something realistic here. The H1 scale, the hourly scale. So price went from 68.80, let's say, to 70.50. 68.80 to 70.50 is 170 pips. So price moved 170 pips. So how many dollars does that represent? Depends on your lot size. You can use a lot size that would make a pip equal a dime. A pip could equal 2 dimes, 5 dimes. A pip could be $1. A pip could be $10, and so on. Just depends on your lot size, and you choose your lot size based on your account balance size. If you have a big account, you use a bigger lot size, and then a pip is worth more. So let's say you start really small with a $100 account or something, and you are using a dime. A pip is worth a dime. You just choose that, to be safe and to limit your risk. So, and you just gained, what did we say this was, 170 pips? At a dime a pip, you just gained $17. So on a $100 account, that's a 17% account, balance gain in one trade. Let's say you entered a buy trade here and exited here and got those whole 170 pips. You just gained $17. Now, if you're on a bigger account, or you just chose a bigger lot size, let's say, you chose a lot size that would make it $1 a pip instead of a dime a pip. You just made $170 instead of $17. Let's say you chose a $10 a pip lot size, and now you just made $1,700. Doing the same exact trade as the person doing a dime a pip made $17. You made $1,700 because you have a bigger account and a bigger lot size. So the idea with Forex trading is to start with a small account, build it, and learn the skill that you can consistently gain those pips. And as your account balance grows, you change your lot size proportionately, and then you move from making $17 to making $170 to making $1,700, and all the little increments in between those landmarks, okay? And then over time, your account balance grows, it compounds and grows exponentially because you're doing the same skill, the same exact trade over and over, and it's just worth more money as your account balance grows. So without getting into too much more detail, we measured time with candlesticks, we measured price value with pips, and we talked about time frames. That's the gist of a chart. We can talk about various indicators that tell us what price is doing or what it might be doing next that help us determine that. We'll do that on another video. I want to keep this as short as I can. So I just thought this would be useful as we look at charts in the days ahead, so you kind of understand the general gist of what this means. Basically, New Zealand dollar value is going down. New Zealand dollar value is going up. It's going down. It's going up. It's going down. It's going up. It's going down. And that's what you need to know for now. So I hope that was helpful. Thanks for joining. And I hope you can join me for the rest of this journey. It actually does get more interesting than this, but unfortunately you have to understand some basic terms and kind of what you're looking at before we can talk about what I actually do on a day-to-day basis and how this translates to real life with real people and real dollars, and where we're going with this thing in the long run. Okay? Thanks for joining me. Love you guys. Bless you guys. Have a great evening. We'll talk again soon.